Welcome to Stock Talk. Two voices here, ready to get into the weeds.
Indeed. We're looking at Mastercard's first quarter for 2025. Just came out May 1st.
Exactly. We've got the earnings analysis right here. And the goal today is really to pull out the most important bits.
Yeah, figure out what's actually driving their growth, what the key numbers tell us.
Right. So you get a clear, concise picture of where Mastercard stands right now.
Okay, so diving right in. The headline numbers look, well, pretty strong.
Strong how? What's the top line?
Net revenue, it jumped 14%, hit $7.3 billion for the quarter.
14%. Okay, that's solid. But I often look at the currency neutral number too. How did that look?
Even better, actually. Currency neutral growth was 17%.
17. Okay, so that difference, the 3 points, that's just currency headwinds.
Pretty much. It suggests the underlying business, across different markets, is really humming along, even stronger than the reported dollar figure shows.
That makes sense. It kind of highlights their global operational strength, doesn't it? Despite FX fluctuations.
Exactly. And it wasn't just revenue. Operating income also saw a good lift, up 15% to $4.1 billion.
And profitability. Margins holding up.
Yep. Operating margin actually expanded a bit, reached 57.2%. That's 40 basis points higher than last year.
A 40 basis point increase. So they're not just growing, they're getting more efficient as they do it. Any thoughts on what's driving that efficiency?
Could be a few things. Scaling your tech effectively, maybe getting more leverage there, or perhaps a shift towards, higher margin services in their revenue mix.
Right. And they mentioned an adjusted margin too.
They did. Adjusted operating margin came in at 59.3%. So really robust profitability overall.
Okay, impressive margins. Let's shift gears to the volumes, the actual money moving through the network.
Right, the core metrics. Gross dollar volume, or GDV, that increased by 9% on a local currency basis,
Yeah.
hit $2.4 trillion.
$2.4 trillion. Just staggering scale.
It really is. And purchase volume, which is maybe a bit closer to like direct consumer activity, that was up 10%.
10% purchase volume growth. So pretty healthy consumer spending reflected there.
Seems like it. And the network activity itself, switch transactions, they processed 48.1 billion of those.
48 billion transactions. Wow. How much was that up year over year?
That was up 9%. So consistent growth across the board in terms of activity.
Yeah, it really paints a picture of just how embedded they are in, well, global commerce.
Absolutely. And that flows through to the bottom line, of course, earnings per share.
How did EPS look?
Diluted EPS was up 11% to $3.59.
Okay.
And the adjusted EPS, stripping out any special items, grew a bit faster, up 13% to $3.73.
13% adjusted EPS growth. That's pretty consistent earnings power they're showing.
Definitely a key sign of financial health for investors, yeah.
So strong financials, solid volumes. But Mastercard isn't just sitting still, right? What about innovation, strategic moves?
No, they highlighted a few things. One that caught my eye was the introduction of Mastercard Agent Pay.
Agent Pay, what is that exactly? Some kind of AI thing?
It seems like it. They're calling it an agentic payments program. The idea, as I understand it, is exploring how software agents, maybe AI-powered, can initiate and manage payments.
Huh. So like automating recurring bills or maybe more complex business payments?
Potentially, yeah.
Yeah.
Streamlining things. It feels like a step towards, more automated finance in the future. Early days, but interesting.
Very interesting. Any key partnerships mentioned?
Yes, a strategic partnership with Corpay.
Corpay, they're big in corporate payments, right?
Exactly. This partnership is focused on enhancing cross-border payment solutions, specifically for corporate clients.
So tackling that B2B cross-border space, that's a huge market.
Massive. And definitely a growth area they're targeting.
Makes sense. I also saw mentions of Microsoft and OpenAI. What's the angle there? Still AI.
Seems to be. The focus is on leveraging advanced AI within their own platform.
So less about a specific product like Agent Pay and more about infusing AI into their existing operations.
That's how it reads. Think potentially better fraud detection, maybe more personalized payment experiences down the line, using AI more proactively.
Right. Moving beyond just reacting to fraud, maybe predicting or preventing it better, that could be huge for trust and security.
Could be a game changer, yeah. And speaking of related areas, their value-added services segment also showed strong growth.
Okay, what kind of services are we talking about there, and how strong was the growth?
Revenue in that segment was up 16%.
16%. Nice. What's driving that?
Primarily their security and digital authentication solutions.
So tying back into that trust and security theme makes sense with all the concerns about online fraud.
Exactly. Businesses and consumers are demanding more robust security, and Mastercard seems to be capitalizing on that by offering these advanced solutions. It's becoming a real differentiator.
Interesting how security isn't just a cost center, but a revenue driver now. Okay, let's look geographically. How did performance vary by region?
It's a pretty broad-based growth, actually. APMEA, that's Asia Pacific, Middle East, Africa, saw 7% growth in GDV and purchase volume.
Okay, solid.
Europe showed stronger momentum, GDV up 13%, and purchase volume up 15%.
15% purchase volume in Europe. Wow. And what about the Americas? Latin America often stands out.
It did again this quarter. Latin America led the pack, actually. GDV grew 13%, but purchase volume surged by 19%.
19% purchase volume growth in LATAM. That's really strong. Shows good traction in those emerging markets.
Absolutely. And even in a mature market like the U.S., they posted solid 7% growth in both GDV and purchase volume.
7% in the U.S. is still pretty decent, so really growth across the globe.
Seems their global strategy is working well.
Let's circle back to something you mentioned earlier, cross-border volume. You said it was a key driver. How significant was that growth?
Very significant. Overall, cross-border volume jumped 15% in the quarter.
15%, that's a big number. Why is that particular metric so important for them?
Well, it directly impacts revenue, often at higher margins than domestic transactions. It really showcases the power and reach of their global network connecting different countries.
Right, and what's actually fueling that 15% surge? Is it just travel coming back?
That's definitely a big part of it. International travel continues to rebound, so more people spending abroad using their cards.
Okay.
But it's also the continued growth of e-commerce. People buying goods and services online from merchants in other countries. That digital cross-border flow is also really important.
Got it. So a combination of physical travel recovery and ongoing digital commerce growth.
Okay, let's try and synthesize this. If you had to boil down Mastercard's Q1, what are the main takeaways?
I'd say first, clear financial momentum, strong top-line growth, expanding margins, very healthy.
Okay, momentum. What else?
Second, that cross-border strength. The 15% jump really validates their global connectivity and is a key earnings driver.
Right, global network paying off. Third, the focus on innovation. Things like Agent Pay, the AI collaborations, they're clearly investing in the future, not just managing the present.
Future-proofing.
And fourth, the growth in value-added services, especially around security, shows they're successfully moving beyond just basic payment processing. And maybe fifth, just the consistent growth across regions.
Good summary. So looking ahead, what should we, or rather, what should you, the listener, be keeping an eye on with Mastercard?
I think you'll want to watch how they continue to expand those value-added services. Can they keep that 16% growth rate going?
Yeah, good point.
Also, the impact of their digital and AI initiatives. Will Agent Pay become a real thing? How will AI change fraud detection or user experience? That's definitely one to watch.
And continuing to capitalize on that global footprint, presumably.
Absolutely. Execution in key growth markets like Latin America and Asia, and maintaining that cross-border advantage. Oh, and they did mention share repurchases continue, which supports the share price, though we didn't dig into the specific numbers there.
Right. So overall, it feels like a company firing on, well, most cylinders. Strong current performance, clear strategies for the future.
That's a fair assessment. They seem to be navigating the current environment effectively while making smart bets on where payments are headed.
Okay, so wrapping up this deep dive into Mastercard's Q1 2025, the picture is one of real strength. We saw that robust revenue growth, improving efficiency with margin expansion, and a really significant boost from cross-border transactions. Plus, these strategic investments in AI and partnerships signal they're looking firmly ahead.
Definitely. And considering all the financial performance, the push into AI like Agent Pay, the power of their global network making cross-border easier, it really makes you think, doesn't it?
Yeah.
How might these shifts reshape not just the big picture of the global economy, but maybe even how you interact with money and payments day to day in the coming years? Something to ponder.